Well, Greek banks remain closed on Tuesday as the nation appears set to formally default on a $1.8 billion loan repayment to the International Monetary Fund. This is due today. However, there is a late word that Eurozone top officials and 19 finance ministers will have a teleconference Tuesday evening to assess the latest proposals from Athens to keep the bailout negotiations going. Henry Ridgwell has more from London.
At ATMs across Athens, there are long lines to withdraw cash. The doors to the banks will remain firmly closed for the rest of the week. Capital controls were inevitable after the European Central Bank decided not to continue the liquidity lifeline it has been giving Greek banks, says economist Ioannis Kokoris of Queen Mary University of London.
Apparently banks have between 1 and 3 billion left. And only $1 billion went out on Friday, $1 billion on Saturday. So if they did not put any capital controls, banks would be completely empty.
Talks over a new deal to extend the €240 billion bailout broke up Saturday after Greek Prime Minister Alexis Tsipras called a snap referendum on the EU bailout proposals for July 5th. The Greek government is urging citizens to back its stance and vote no.
We see the referendum as the continuation of negotiations through different means. The referendum is not a way for us to leave the euro.
But European Commission President Jean-Claude Juncker said Greeks would be voting on their membership in the European Union.
A no vote would mean, regardless of the question finally asked, that Greece had said no to Europe.
Early polls show a small majority in favour of agreeing to the deal offered by the EU. The next few days will be crucial, says Kokoris.
If we see any kind of social unrest, I think that will definitely swing the vote to a yes. If things remain calm with the banks, if the salaries are paid on time, if the pensions are paid on time, even to people who do not have an ATM card, then we still will be looking at a very close call.
Greeks must choose between further austerity with no end in sight or the unknown of leaving the euro currency, says Professor Dionysios Dimitrakopoulos.
What is currently on offer does not include what I think psychologically at least Greeks need and what the economy needs, which is a huge haircut. The country cannot repay the debts that it has.
Borrowing costs have all increased in recent days for other debt-laden economies in Europe, including Spain, Portugal and Italy.
Italy has had primary budgetary surpluses for many years, yet its debt has not gone down. So if I were Matteo Renzi, I would think, who comes after Greece?
Analysts say the risk of so-called contagion is lower than in previous years. US Treasury Secretary Jack Lew has urged Greece and its creditors to reach a broader deal and finalise details later. Henry Ridgwell for VOA News, London.
Well, investors around the world are reacting to the Greek economic drama that continues to unfold. Africa 54's business correspondent Alexis Christoforous joins us now from New York with more details. And now, Alexis, what can investors expect this week from this Greek saga?
Well, Vincent, we are all waiting now around the world, investors around the world waiting for the outcome of that teleconference that Euro finance ministers are going to hold in just about a half hour from now. As we know, Greece has asked for a new bailout program from the Euro region just hours before its existing aid agreement expires. This would be Greece's third bailout in just 5 years. However, this proposal does not include any of the economic reform measures that European negotiators have been looking for months now. The Greek finance minister has said his government will not make a $1.8 billion payment to the International Monetary Fund today. But of course, the Greek government is still hoping for a last-minute deal with creditors. Banks in Greece and the Athens Stock Exchange are closed for a second day. They will remain closed for the rest of the week as the country tries to stop a flood of money from exiting the country. World markets are closing the books on the second quarter today. U.S. stocks have actually bounced back after their biggest biggest sell-off of the year, on hopes Greece and its lenders will find a last-minute deal to avert a default. European stocks suffered their worst quarter in 3 years, while the euro just capped its best quarterly gain against the dollar since 2011. Investors, of course, also looking ahead to a vote this weekend in Greece on whether the country will accept more austerity measures in exchange for further aid. If Greeks vote no, analysts say it will put the country one giant step closer to exiting the Eurozone. Vince?
And now we know everybody's holding their breath. But indeed, if Greece ends up leaving the Eurozone, what is the greater implication for the world economy? And in this case, if we can also focus on Africa.
Sure. Well, the contagion from Greece should be contained because many private and institutional investors have already limited their exposure to Greece. So that should prevent heavy losses for investors in Europe, Africa, and Asia. The currency markets have been taking a hit, though. The South African rand fell more than 1% against the dollar on news of the Greek turmoil. But some analysts believe a Greek exit from the Eurozone may actually represent opportunities for African investors in Europe. The European Central Bank, let's remember, is also a lot stronger than it was just a few years ago, and economists say it can withstand a Greek exit from the Eurozone. Many investors remain optimistic Greece can eventually strike a deal to avoid a messy exit from the Eurozone. But even if the country returns to the drachma, many are banking that the fallout can be largely contained to Greece. And economists, of course, continue to point out that Greece is an extremely small economy. What investors fear here is the domino effect. It's not just about Greece, but about the whole concept of political and economic integration across the entire European continent. So this really throws into question the viability of the Eurozone. And Vincent, some are already betting on the next member country to falter. Portugal, Spain, and Italy have all had differing degrees of fiscal turmoil. Vincent?
What a drama. Alexis, thank you very much. Well, that is Africa 54 business correspondent Alexis Christoforous reporting live from New York.